small business owners, you pay tax twice. Once in a limited company you pay, and then you personally pay the tax, so you end up paying more in the taxes. So there is how you can save a bit on the taxes very cheaply and very efficiently. So I will go through a funnel to save the tax. The first one is a bit here where you can do it free. So there are some free tips where you with which we can save on taxes. The next bit is a bit cheaper, but still there are tax planning opportunities for you through which you can save your taxes. And then the last one is through tax efficiencies, where you can do some tax plannings, which is a bit complex. So I will go with the free stuff, where you can just do. So what I mean by the free stuff is how you can, rather than doing those transactions personally in your name, you can put it through your limited company. As you own a limited company and you do stuff from your limited company, rather than owning and doing that expenses personally, it's better or tax efficient for you to do it in a limited company. So the first of this is like private medical insurance. So the first one here is mileage allowance. So if you are using your own vehicle for the business, it's more better if you can claim mileage allowance in a limited company. For example, if you are driving 5,000 miles for a business purpose, you can claim per mile 55 pence per mile, and if it's more than 10,000 miles, then you can claim 25 pence per mile. So if you are using your personal vehicle, that's a good one to go ahead with. The next one is relevant life insurance. So you can have a relevant life insurance for you or your spouse. As a director of a company, you can have it for yourself, which will be tax free, and which will be, rather than paying it yourself, you are putting it through a limited company and reducing your tax bill. The next one is mobile. So rather than buying a mobile in your name or buying a contract in your personal name, you can take it in a limited company and put it through as an expense in your company and reduce your tax. Same you can do with your laptop and electronic devices as well. Rather than doing it personally, you can take it from a company and expense it out. Fourth is trivial allowance. Every director is allowed to have 50 pounds as a trivial expense, and in a year they can claim up to 300 pounds. So that is again tax free and totally free to do so. So the fifth one is use of home allowance. So if you are working from home, you are allowed to use allowance of that, like which is £6 a week, but it could be portion of your total mortgage and your expenses of running of your home, which is a bit complex, but in some situations you can use your use of home allowance of the actual expenses of your apartment or of your home, and apportion it a bit to the number of rooms or portion it appropriately for the use for the business. So sixth one is pension allowance. So everyone is allowed to put into pension up to 60,000 a year into pension. So like you do as an employee in a limited company owner, you can go and put a contribution into the pensions, which will be totally tax free. So for example, if you're putting £10,000 into pension, you are saving around 1,900 to 2,500 pounds in tax. So you can do so for yourself, and if your spouse is a director in a limited company, they can do as well. So up to here, then the next thing is salary. You can put a salary of 12.5 grand to cover your personal allowance, so which is totally tax free, and doing so you are saving around 3,000 pounds in taxes. And again, if your spouse is working with you in the business, you can do it for yourself and your spouse. So up to here it was the free stuff which you can do. Going forward, I am explaining a bit cheap stuff which you can do. First one is, for example, you can put a private medical insurance into the company. So here, why it's not free is you can claim the private medical insurance through your company, totally fine, but the caveat is it will be treated as your personal income as well as a benefit in kind. So there will be some tax on it, but still it makes sense to put private medical insurance through the company. The next bit is dividends. So if you have taken a salary of 12,500, it covers your basic allowance, personal allowance, but over that up to 50,000 you have a basic allowance where you are paying a dividend tax of 10.75%. So cover that part with your basic allowance. So up to the income of 50,000 you can take around 37,700-ish pound into dividends if you are just taking a salary of 12.5 grand. So with the salary and private medical, you have saved something already. the third thing which you can do in this section is electric vehicle. So if you are having an electric vehicle through your company, you are saving in corporation tax significantly. There is a benefit in kind for that, but still it makes sense to have a electric vehicle through your company. So the next part is where there is a more complex tax efficiency tips which you can do. So when you are setting up a company, you can have your spouse and yourself having shares, and you can have alphabet shares, different type of shares associated with each of you and your wife. So, if your wife is not having higher earner and her income is lower, so you can pass on some of the dividends to her as a strategy to extracting amount from your limited company. That's one way where you can take the dividends as well. You can give her specific classes of shares where she will own the majority of the shares, but she will have just some shares with some classes of specific classes of shares where she will be only taking dividend out of it. The next part is if you have kids in your who are over the age of 16 and they are employed and doing some admin or social media stuff for you or some work for your company, you can claim, you can use their personal allowance of 12.5 grand, and doing so you are saving in corporation tax as well as extracting money most efficiently out of your business. And if you have a spouse, you can run a salary for them as well. And another way is if you have lent your company a money, for example 100,000 pounds at a director loan, you can charge interest over it, but keep in mind like you have to do a quarterly reporting for that interest, and there will be a benefit in kind, a benefit to be reported in your self-assessment. So that's why most of the directors and business owners do not do this. So overall, by doing all of those free stuff and some other tax saving stuff, you can save significantly on taxes. Generally you can take up to 120,000 to 150,000 by doing pensions, salaries, dividend and other mix of expenses like mobile phone, personal, other business expenses you can put through your company. So in this way you can extract business amount from your business most tax efficiently, and in the process you are remaining tax efficient and building your business more tax efficiently, and where you can save on taxes. So we are qualified chartered accountant trained with KPMG, having 18 years experience dealing with SMEs. If you need any help or specific videos or topics you want us to create, please get in touch and we will help you with your queries.